I would say that one of the main changes I've seen is the interest in the region in terms of diversification of borrowers. Traditionally, the Middle East has been a relatively undersupplied area for the capital markets, but investors in the new paradigm of lower oil prices are expecting an increase in supply and a variety of transactions to come, whether it's in the conventional form of syndicated loan and straight Eurobonds or more structured supply like corporate hybrids, tier ones, bonds from the banks to supplement their capital, and other instruments both into private placements where there's been increased demand from investors from outside the region, and also structured products targeting the retail market. I think predominantly with the lower oil prices, there's been a change in the dynamic of issuers' recognition that they need to broadly embrace the global capital markets, so away from domestic solutions, i.e. syndicated loans from predominantly regional banks. They're recognizing they need to spend time setting up structures for accessing the international investor base, including Sukuk bonds, for example, and making sure they have the maximum flexibility to put their name out there, whether it's effective marketing in Asia, in Europe, selectively in the United States, just to make sure for investors who haven't invested in the region or have been underweight the region due to lack of supply or other factors, that they now are prepared to look at the range of borrowers who will need to access the international markets. It comes back to the theme of selective marketing. There are some very high quality corporates in the region that are not that well known outside the region because they haven't issued bonds or had medium-term note programs allowing them to access this broader market. I think again, the opportunity for diversification at a cost-effective level when local bank lending is probably a bit more stretched than it has been traditionally because of the regulatory environment around bank capital, etc. This gives these top borrowers an opportunity to look at alternative structures, alternative currencies, again, to put themselves at the forefront of the investor desire to increase their exposure to the MENA region. Corporate hybrids has an increased place in investor paradigms. We've seen an increase of supply, particularly in Western Europe in the last 18 months of well-known corporates from various respected sectors using this instrument as quasi-equity, getting preferable treatment from the rating agencies. And I do think, although there's been a relative limited amount of supply from the region, for those top corporates, it's definitely a product they should be thinking about, partly because of the benefits of the accounting treatment, and also in terms of the combination of offering investors a high yield for a name that they like and can't get access to in conventional debt, and also for providing an alternative financing structure which helps them with their asset and liability management going forward.